Hi folks, you're welcome to episode 6 of Forex Beginners Lessons. Okay, so today we will be discussing about trading tools. Okay, and then these are some of the things we are going to be talking about. Instant market execution, this is what we will discuss about, and then limit orders, we will look at stop orders, we will look at take profit, and then we will look at stop loss. So anytime you hear a trader saying, okay, I picked the trade, or I entered the market and then I'm having an open transaction, so these are some of the things that those traders are using. Okay, if you see someone telling you, okay, I made a profit in the market today, then these are some of the tools that the person used. Okay, so now uh going on to that, we will start with instant market execution. Okay, so now this is what instant market execution is. Assuming I just logged into forex market and then I now discover that after making my analysis, I expect the price will start moving up from this place. Okay, look at the price. The price currently, I'm on euro USD. Okay, currency pair, and then the time frame is 15 minutes time frame, and then look at the price for this currency pair at the moment is 1.08221. Okay, so please permit the terminologies I'm using because I've explained them in the earlier episode. And if you have not watched the first episode, second, third, fourth, and fifth episode before coming to this video, then I would recommend you go there because you will make more sense, out of this video if you have those earlier episodes, because I have explained to the basic level the things you need to understand in Forex before you can be able to assimilate this one. Okay, so now if I now discover that at this current price, the price will start moving up. Okay, what I will do is that I will just come and buy. Okay, once I come here, okay, so I will also record videos on how you can be able to do that using your mobile phone, but then I will want to illustrate this to you so that you can be able to understand what instant market execution is. Okay, so I'll just come and click buy at this moment. Okay, so once I will just put my lot size. Let me put a lot size of 10,000 units. Okay, and then I will just click what, buy. So for those of you that don't understand what lot size is, I've also explained that in the earlier videos. Okay, because all the episodes that I am making, I am trying to ensure that I break them down step by step, because I acknowledge that most of the people giving up in forex is because they have not gotten someone that give them, what do they call it, give them step by step knowledge and approach on how to do that. Okay, so that is why I have dedicated this channel to explain this video step after step, meaning you need to watch the videos one step at a time and then you need to follow them serially. So now I just bought in this market. So anytime this market, the price moves up now, then I will be making profit. And if it goes down below where I bought, then I will be making a loss. So now that is what instant market execution is, because I have already activated the trade immediately. As I am going to the market, I have activated the trade. So that is what, instant market execution is. So now let us go to limit orders. But before we go there, I want you to also know that if I was making my analysis and then predicted that the price is going to be dropping, then instead of buying, then I will be selling off. So it's just the same thing. The only thing that qualifies it to be an instant market execution is the fact that you are placing the order there and then. Okay, so that is what instant market execution is, just from the word instant. Okay, so now let us move to limit orders. Limit orders, on the other hand, is when you anticipate the price to move to a particular point and then reverse. Okay, so both limit and stop orders are called pending orders because it is not instantly at that moment that you are going to activate the transaction. So they are called pending orders. So now in the pending orders, we have limit orders and stop orders. So now let us understand what limit orders is. So limit orders simply means you anticipating a price to move towards a particular point and then reverse at the end of the day. So let's say I am anticipating that the price will move up from this point, from this current market point, and then it will move up to this point. Okay, then and then after that, if I predict or anticipate that the market will now, after moving this to this point, will now start moving down and then reverse down, then I am going to be setting my what, limit order around this point. And what I will be setting is sell limit, because by the time it hits this point, it will be dropping down into the sell direction. So in this point, I will be putting my sell limit. Okay, so now But on the other hand, if let's say the price is anticipated to what, to move down, let's say to move down to this point, and then when it hits this point, and then it will now reverse and go up, then I will be putting my what, my buy limit, because I am expecting that if the price comes down to this point, it is going to reverse up. So I'm going to put a pending order in the market, such that by the time I place this order, if the price keeps on coming down gradually, then it's not going to have any implication on me. But the moment the price comes down and then hit this point where I put my own limit order, that is buy limit, then the market will now activate a trade for me at that point. Okay, so you see the difference between instant market execution and then limit order. So let me show you a simple example of how a limit order is. Let's now say I am expecting this price to now come down to this point, but then I am now predicting that, okay, if it comes down to this point, all indication shows that it is now going to reverse up and then go up. Okay, so what I will be doing is that I will be putting my buy limit here. Okay, but if it was going up and then expecting it to come down, it's going to be sell limit. So now let me demonstrate that in a real market chart. Okay, now you will just come to your own buy, and then now you will select a limit order. I will just click here. Okay, so once I click here, then I will just come and put the price at which I will want to put my buy limit. So look at the price here. You know, I'm expecting it to come here. So look at the price by the right side, which is 1.07611. So now I will just come and put the price at 1.07611. Okay, then what I will do is that I will just put my lot size, which is, let me leave it at this 10,000. Then I will just hit my buy here. Okay, and if it is sell limit that I want to set, I will click on this sell here. Then I will just put in the price. Let's say I am about to put this price here. I will just input that price and then click sell. Okay, so now let me use the buy limit. So I will just come and click my buy here. So by the time I click my buy here, you will now see it that it is already having my buy limit activated. Now if you can see this point, I have a buy limit that is already activated around this point. Believe you me, if this price comes down to this point and then hits this point, then it is going to activate the trade for me. So now, if now it reverses up and then start going up, let's say it reversed from this point and then start going up after hitting my buy limit, look at the money I will be making considering the lot size I used. Okay, now let me just calculate it for you guys. Then this is 100, this is 107 pips. Okay, so that will be equivalent to $107. And let's say this thing transaction happened, or let's say this price moved in just less than 2 hours, then imagine the amount you'll be making in just 2 hours, $107. Okay, so that is what a limit order means. Now this takes us to stop orders. Okay, now what does stop order means? So looking at it in the real market, a stop order simply means you predicting or expecting the price to proceed beyond, a particular point if it reaches, if it moves. Now we were saying that, okay, if this price move down, okay, to this point, it is going to reverse in the case of limit orders. But in the case of stop orders, you are now saying that, okay, if the price reaches this particular point, if the price drops down and then it reaches this particular point, then it is going to continue coming down. So then you are now going to be putting your stop order. Then it's going to be something like this. Okay, by the time it reaches this point, then the price is going to continue coming down in this direction. So then you will now put your what, your sell stop here. Okay, because the word sell means anytime the price is dropping, then you are talking about sell. Okay, so you are now telling it, okay, if this price comes down to this direction, then it will continue going down. But if it is, in the buy direction, if the price goes to this point, okay, let me show you something. If the price goes up to this point, then it's going to be something like this. It's going to be something like this. Let me drag this, my indicators, so that I will explain it. So now if it is buy stop, you are now telling the market that, okay, now if the price comes to this point, this very point, then I think this market will continue going up. It's not going to reverse, because any price going to this point then will signify that this price will just keep on going up. So now you will now put your what, your buy stop around this place. So that is what buy stop means. So limit orders and stop orders are two different pending orders, but what they mean is that limit orders is telling you that when it goes to a particular point, it is going to reverse, and then start moving in the opposite direction. While stop orders are telling you that, okay, if the price moves up or down to a particular point, then it is going to continue in that same direction. So I believe you now understand what limit orders and then stop orders are. Then now let us move to take profit and then stop loss. Okay, what do take profit and then stop loss means in the market, and then how can one be able to use this tool in the market? Now I will want you to know that, just as I've explained earlier, if you are not good at making your analysis of the prices before going into trades, then it's going to place you at a very high risk. And anytime the price moves in an opposite direction, against the prediction or analysis that you made, then you are going to lose a lot of money. So that is why we have that take profit and stop loss. Now let's say you are going into the market and then you want to place your own trade here. So now I just placed a trade here. I just placed an instant market execution of buy here, a buy trade. So now I will now tell myself, okay, now what if the price move against the direction that I predicted? What do I want to do? Do I want it to keep on going down until it chops a lot of my money or even burn up my account? So that is where stop loss and take profit means. And then also you will now tell yourself, okay, now what if it begins to move up in my favor? At what point will I want, the market to give me my profit? Because if you allow it to keep on going up again, going up, going up, going up to some point, and then it may reverse and come down and then begin to put you in a loss. So take profit and then stop loss exist because of things like that. I hope you are getting the point now. So the point now is that if you really want to do that, then you will be what? You will be setting your orders and then tell them what exactly you want them to do, because you may not be sitting in the market and then looking at what the price is doing and then expecting it to move and then be watching for 24 hours. So now I just bought this euro USD pair at this price, and then I am now telling myself that, okay, let me just use this tool here. Now I will now tell myself, okay, I think this price will move up to this point, okay, and then it will start reversing down. And then even if it reverses down, I just want it to like give me my own profit here around this place. So what you will do is that you are going to use your take profit. So what you will do is that you look at the price around this point, this very point. So let me move this thing up and then check it. Okay, what is the price around this point that I want to take my profit? If the market moves up, then it's going to be 1.08832. Okay, so now you can just come and then modify the order, or you can come to this point and then just hold this thing and then drag your take profit here. So you can see I have moved my take profit, and I will just what? Modify it here. I will just click modify. Or if I even want a different price, I can edit the price here and then I'll just put it. So you can see it is about 60 pips in the direction that I made my analysis. So I'll just modify. So what this take profit means is that if the market now all of a sudden decided to move up, retraces, move up, retraces and then move up and then finally hits this very particular point, then the market is going to automatically close that order for me and then save my profit in my own trading balance. Okay, so what this means is that even if I shut down my phone or my system and then I go to do whatever I want to do, I off my data and then do nothing and then just go out to do other activities that I'm having, the market will automatically close the transaction for me when it reaches the place where I put my when it reaches the point where I put my take profit. So I hope you are getting that. Now, what if the price now decided to move against me? Instead of it to move up, what if it now decided to come down? What then is going to be the repercussion of that? So that is another thing that you will now put your stop loss into play. So now, if the price now decided to now go in this direction, okay, instead of it going up, it now decided to come down in this direction. It now decided to retrace, come down, retrace, come down. You know, now let's say the market decided to just come down against you, okay, what you are going to do is that you are going to put your own stop loss. Now let's say you want to tell the market that, okay, I just bought here, and if it decided to come down to the sell direction, then I want the market to exit me around this point. So now let me show you a particular price. Let's say the thing will just come down to this point. If it comes down to this point, then you are telling it that, okay, please, I don't want this thing to, continue going against me. I don't want it to continue going against me. And then let me measure how many pips is it, if it comes down to that point. It will be just around 34 pips. Okay. So if the market goes against you, then you set your stop loss at this point. Then even if you are not online, the market will just close the transaction for you, but then it will deduct this $34, simulating the total number of pips that set that your stop loss on. So now if you want to put that, you can just go and then modify that one. So now I am just dragging my stop loss now, then I will just come on what and then modify it. So that is what that means. Okay, so stop loss helps you to be able to manage your risk and manage your losses, while take profit helps you, to pick out your profits when it reaches the peak before reversing down. So I believe you now have a lot of knowledge from this episode of today, and then I now hope that you now understand what exactly people are doing in the forex market. So now, in the next video, we will be discussing about the basic market structure. So that is what we'll be discussing in episode 7, which will now happen to be the last episode for this beginners class before we now move to the intermediate, where you will now be picking live trades and then learning a lot of things in the real market, because we will go into practicals now. So we will discuss about, in the next episode, we will discuss about, um, market structures, okay, the basic market structures, things like trend, things like range, support, resistance charts, and things like that. And then of course, by the time you are able to understand all that, then it will be easier for you to make your own analysis, to go to the intermediate classes, and then you will learn a lot. So, and if you want to take your forex journey to a very great and to the mastery level, where you can be able to make your profit and then enjoy great money by just sitting on your laptop and then making your own trade, then I will advise you to join the Telegram group, through the link I posted in the description of this video, so that you will have access to, the forex concepts tutors, and then you will have opportunity to be able to ask real-time questions, and then you will get a real-time answer to your questions. So I believe that will be able to help you to move with your trading journey. And all I will want you to understand when it comes to forex is that if you can be able to make analysis and then predict the direction to which the prices will be moving, then you will be making a lot of money. Because imagine you are good at making analysis, and then you now see a point here, and then let's say at this point you know that the price will move up. After your analysis, you will just buy with a particular lot size, and then it will move up. You pick your profit, and then you know what the price will move next, the direction the price is going to take next, and then you move in that direction. Then believe you me, you will become a master at forex. And that is exactly the knowledge I am trying to impact on you in this forex concepts channel. So I believe you are able to get a lot of value. So please don't forget to like this video, and then please also subscribe if you have not subscribed, so that you will be reminded anytime we post a video here. So thank you guys, and see you in another episode. Bye.